Sanjay Sinha, Citrus Advisors, joins us right now. Sanjay, hi, good afternoon. Markets have been fairly tempered in the last few sessions, if you see, or the last 1 week or so, barring one or two odd sessions. But how are you navigating this market, which is a tad bit of, which is seeing a tad bit of jitteriness ahead of a lot of global developments which are at hand and also ahead of elections? What's the right way to navigate?
So I think, to some extent, the apprehensions as to whether the 11,000 points of Nifty would be taken out or not got a lot of support from the RBI decision to cut rates. But the follow-through news that went along with this development was not very positive. In the sense, we got one of the corporates announcing the largest loss in the corporate history of India. That was one event. The mutual fund numbers that came out, that number also was a very, I would say, disappointing number as far as the market is concerned. The issue around the pledging of shares by promoters also made the environment very murky. So I feel that, if we did not have all these negative news coming back to back after the RBI rate cut, we would have been very comfortably above 11,000 points of Nifty. But look at the positive side, the fact that we are not even after so many negative news slipping anywhere close to 10,500 points. Market seems to be getting a lot of support at 10,800 points. To me, points out that in the run up to the elections, while there will be some amount of apprehension and jittery feelings among the market participants, overall, the market will be, I would say, in a range which should be comfortably above 10,000 points of Nifty. The way to navigate this market with this situation would be to take your bets in terms of evenly poising the portfolio between the defensives and the cyclicals, because in the event that the election throws out an unexpected result, then we could see a much bigger damage to the cyclicals than we could see on the defensives.
Sanjay, there's this new risk of sorts emerging about promoter management, about corporate governance, etc. I mean, so many pockets of stocks have been inundated with this new fear that's emerging. How would you advise retail investors to navigate through such waters?
Actually, that is the toughest thing for a retail investor to deal with. In the course of the last 3-4 months, I have seen that the amount of awareness and the amount of discussion that is happening around the issue of corporate governance has gone up exponentially. We had the milestone event called Gatekeepers of Governance, organized by the ex-chairman of SEBI in the month of November. Followed by that, I was very surprised and pleasantly surprised, I will say, to be invited to one of the management schools discussion forum where the topic of discussion was corporate governance. And just last week, there was a roundtable discussion on corporate governance that had some of the very senior people from the industry participating. Now, the issue, and one of the things which came out from that discussion is that given the fact that we today have close to about 2 crore plus unique shareholders across various companies, I'm not very sure as to how many of them are actually qualified to go through the financials of the companies and understand the issues of corporate governance. So I think the institutional investors have to play a bigger role as far as the concerns on corporate governance are in terms of the issues related to corporate governance. And on that, we will have to see as to how this issue evolves. Because whether we like it or not, majority of the corporates in India, given the legacy issues in which they have gone away, they've got away with, I will say, inferior practices on corporate governance. This will take some time to change.
Right. Sanjay, also would like to get in your perspective on the earnings in the quarter gone by for Q3. We're in the final phase of it. Most of the companies are out already. How are you reading into the numbers and the performance overall? Any particular space or any particular themes that stand out for you?
So, on a macro level, one theme that stands out very prominently, the growth in the net sales is much better than the growth in the net profit. So obviously the margins of the companies are under strain, and I think that is not very surprising given the fact that the last quarter of calendar year 2018 saw fairly elevated commodity prices, and therefore the raw material prices would have hurt the margins of many of the companies. So that is one macro theme that came out in the results that we have seen till now. The other thing which is a positive thing that has come out is that we now see the corporate facing banks reporting reasonably good numbers. One would have been very happy if all the PSU banks reported a net profit this quarter, but unfortunately some of them have surprised us even now. But the bigger ones, both on the private as well as the public sector, corporate facing banks, they have delivered a much better performance this quarter. I think that is one healthy sign. The other thing that I would say that on an overall basis stands out is that while the margins may have been under strain, the consumption story seems to be intact. That has come out in the results of in companies across sectors, whether that be FMCG, whether that be in other sectors. The one pocket of concern which today is before us is the auto sector, because the lack of the restricted flow of credit, the elevated retail fuel prices has taken a toll on the sale of autos, and that has also translated into their quarterly performance. And if this persists, I think one will have to be a little guarded about this sector.
Okay, all right, Sanjay, great chatting.